Hi, I'm Sandra Moody with Dehan Enterprises Insurance and Financial Services. We're an all-lines insurance agency in Columbus, Ohio, representing multiple carriers to help you in the creation, accumulation, and protection of wealth. Insurance is designed as a risk management tool. Oftentimes, if businesses do work with the public sector, city, federal, state government, they're required to have bid payment and performance bonds. What these are tools that protect public sector dollars. A bid bond is almost like earnest money, basically saying if you win the bid, you will perform it based on the terms of that contract, on time and within budget. The payment and performance bonds simply guarantee that commitment. If you default on the job or on that contract, unlike insurance, the business owner and the business assets are pledged to reimburse the insurance company / surety company, to reimburse that owner for any causes of financial loss due to your non-satisfactory completion of the project. That is why municipal governments require it. It's a state law. It's been said that bid payment and performance bonds are difficult for small businesses to attain. That is true because they are evaluated like credit. Unlike insurance, you can call your agent and say, I need car insurance today, and they can provide you car insurance today. On bonds, you have to go through a credit underwriting process very similar to lending and borrowing as a bank would do. Because business owners, if they default on the contract or default on the bond, they have to reimburse that insurance company for any costs they put out on that business's behalf. The insurance company has to make sure that the resources and the assets are present, either personally or corporately, to back that bond. Many times, insurance companies will use collateral to give them some greater assurance in that protection. We work with many carriers who focus around small businesses, first-time bonded contractors, and they're a little bit more creative, a little bit more flexible in their underwriting process. So we have had a great deal of success obtaining bonds for new, small, first-time bonded businesses. Additionally, the SBA and the Federal Transit Authority also provide some bond assistance programs, along with the state of Ohio, working to provide additional bonding resources for small businesses around the state. General liability. Most businesses need general liability. That is a commercial business coverage that more or less functions like lawsuit coverage. So regardless of the type of business you're in, the industry, every business needs general liability. It's designed to provide protection due to property damage, bodily injury to others. This can occur from faulty workmanship. It can occur from breach of contract. Anytime where there is accusation of fault, that business has to defend themselves and possibly pay damages. So commercial general liability provides that protection to that business to pay any damages as well as pay legal fees and attorney fees. So I highly recommend that every business obtains commercial general liability. Too often we do see small businesses, after being in business a number of years, because they're seeking a contract with a particular firm and that firm is asking for their insurance certificate, that's when they come. So I do encourage businesses, just as a means to protect assets and protect income, to obtain commercial general liability when they first go into business, because anything could happen or go wrong. And insurance is a unique commodity. You cannot buy insurance when you need it. It is a planning tool so that you purchase it and you have it as a part of that protection device and risk management strategy. The cost of bonds. For bid payment and performance bonds, they generally are, the cost is determined by the credit of the business and the business owner, as well as the size of the bond. For small first-time bonding contractors, we typically see rates between 2 and 3% of the bond amount. More prime contractors, large organizations, those premiums can go down to 1% or 0.75%. So typically small businesses, bonds under $1 million, under $500,000, you're generally going to see about 2.5 or 3% on a premium. We often get questions about license and permit bonds. These are for certain trades, and cities and municipalities typically require contractors to obtain a license or permit bond. These are smaller bonds, $5,000, $15,000 ranges, and these are just by a fee. Most insurance companies do not require credit analysis to provide these license and permit bonds, and they can range from $100 to $200 in cost for about, as I said, $5,000 to $20,000. In most of your cities, suburban areas, counties, they will require contractors like plumbers, electricians, your trades to have a license or permit bond. Bonds are not like insurance. Two different animals. The real unique difference in bonds versus insurance is a term called subrogation, which is simply another means to say reimbursement. A best example, if your car is totally destroyed in an automobile accident, your insurance company reimburses or provides you the cash for the loss of your car based on the value of your car. You do not have to reimburse the insurance company for paying that value to you. Unlike bonds, if there's a default on the bond and the insurance company has to put out money to cover that default, the business assets and the business owner's personal assets are pledged and required to reimburse the surety for any of the losses they paid out on behalf of that company. So you have this reimbursement factor in bonds that you do not have in insurance. Distinct difference, and that also plays into the underwriting process, which often makes it a little more challenging to secure bonds.